Real-time 24/7 payment capabilities are one of the most transformative shifts for treasurers in decades. Siemens, the German multinational, has rolled out instant payments in one of its divisions using blockchain and distributed ledger technology that integrates with traditional fiat currencies, aka government-issued currency and not a cryptocurrency like Bitcoin, in a truly pioneering strategy. I'm Sarah Rundell from Treasury Today Group, and I'm joined now by Heiko Nix, Head of Cash Management and Payments at Siemens, and Nervin Chetty, Executive Director, Head of Transaction Banking Sales, Germany and Nordics at Standard Chartered. Together, we're going to explain how transformative this technology is for payments, how treasurers can get involved, and debust some common blockchain myths. Welcome to both of you.
Yeah, thank you for having me here, Sarah. Very looking forward to our conversation today.
Thanks for having me as well, Sarah. Looking forward to it.
Okay, so before we get into the detail, and for the uninitiated, I want to spend 2 minutes on blockchain and what it does. Could you also set the technology in the context of the wider cryptocurrency world? Nervin, can I go to you first with that one?
Sarah, thanks. I think before we get into the blockchain piece, we really need to take a step back and perhaps just go back into the distributed ledger technology, DLT as we all know it. I think if I fundamentally explain what that is, the blockchain is basically a subset of that. So a distributed ledger technology is a decentralized digital system that records transactions between companies in multiple places at the same time. Distributed, so many places at the same time, ledger, data, transactions in the case of our discussion today, and technology to move it around, DLT. Now, blockchain is a subset of a DLT and has been, or more historically, been associated with the financial sector as a means of recording a payment system, and hence where we find ourselves today. I think more importantly, the why. We've been using blockchain, or why the concept of blockchain comes in. And there we just look at some of the benefits. The data is stored on chain, basically using blocks to move them. So a lot more secure. It's always encrypted, so very safe. And it's generally public or permissionless, which means that always available. And very importantly, always immutable, meaning the transactions themselves cannot be changed. And therein lies the concept of blockchain.
Heiko, what would you like to add to that? Do you agree?
Yeah, I mean, blockchain has been always seen in the context of Bitcoin, right? But Bitcoin is just one use case of this technology. And as Nervin said, right, we are talking about at the end of regarding a distributed ledger. So when the distributed ledger is a car, then the blockchain is the motor engine, I would say.
Okay, yeah, I like that analogy. And would you agree, Heiko, that the corporate treasury community's been rather detached from blockchain? And do you think it's making a comeback, or just at Siemens?
I don't think when I look at the market, it's only Siemens. But as I said, the first and most widespread application of this technology is still to create a cryptocurrency like Bitcoin. When I first looked at cryptocurrency, I asked myself, what can I do in payments with a cryptocurrency that cannot be done with fiat money on blockchain? So from the practical standpoint, I have to say, not much. Can I pay my business partner in cryptocurrency? Do my vendors want to be paid in Bitcoin? Or can I make salary payments with it? Maybe not. And I have to manage additional risks. The lack of payment controls like KYC or sanction screening. And we see a high volatility also. And do not forget, the accounting treatment is usually as an asset and not as cash. Let's look at El Salvador. El Salvador has introduced Bitcoin in 2021 as an official tender. Nervin, now a question to you. What do you think? How many payments Siemens has received since then?
Oh, Heiko, you're putting me on the spot here. Roughly thousands, I would say.
0 payments.
Wow.
Yeah, because I think it's just the lack of practical benefits.
Mm-hmm. Yeah. And Nervin, anything to add there about how you're seeing blockchain applied in Treasury, particularly around payments?
Absolutely, Sarah. I think, perhaps more importantly, what are we trying to solve for within the Treasury? What keeps treasurers like Heiko and others awake at night? What are the big questions? So I think, access to excess working capital, trapped cash, more efficient cash flow forecasting methods, real-time payments. The reason we're all here today to talk about real-time payments, that's some of the fundamental priorities that sit on top of mind for a treasurer. So when we think of this, how do we then apply the concept that we're looking at today to solve for these problems? And I think, the way to look at it is, think of it as a new way of moving money around the globe. Think of it as reshaping the way money moves globally, by just optimizing how the liquidity is accessed, how the development of new capabilities and products come through this unified ledger. And with this, you then start to introduce new concepts such as programmability, 24/7, always on platforms. And this makes the global movement of money more seamless, more secure, and again, more scalable. I mean, just touching a little on programmable payments, it already exists today in the banking system. As an example, a standing order or a direct debit in its essence is what we could call a programmable payment. Standing orders and direct debits are very flexible or very limited, but add on to that the ability to have more degrees of freedom, and automatically you have a whole new product suite or whole new offering. So these are some of just the ways that I think blockchain is being applied to Treasury for payments today.
Yeah. Well, so over to you now. So can you give us a bit more sort of granular detail about how you used it, how you integrated it, the problems it solved, opportunities it opened up, and how difficult was it?
Not so difficult, I have to say. For us, it was really important that we are not using cryptocurrency. That was number one boundary condition. So that we use fiat money, US dollar, euro, things like this. So, and under this boundary conditions, I see, and some of them already touched by Nervin, 5 interesting features in coming from the crypto space and can be combined with fiat money. Number one is also already mentioned by him, executing 24/7, real time, and also global. Because in the crypto space, there is no cross border, there are no borders. This is one system. So that's why, having a 24/7 real time global business and executing payments in euro and US dollar is beneficial for a global treasury operations like Siemens. Second, also mentioned already by Nervin, programmability, having the ability to trigger transaction on any data we have in form of an if then else. So if the bank account balance is sufficient, then make the payment. Else, fund the account first. Such complexity can be done with the programmability in that space. So for us, we use this as self-funding bank accounts, and these replace our static cash pools so that we're making sure that no payment fails. The third interesting part is the tokenization. Having the digital representation of any real-world assets enable also the trading of such assets. For instance, the issuance of a digital bond is a good example for it, which we did already this year. The third one is atomicity, unbreakable transaction, and you can see it like a dominoes. Either all fall or they all stand. There's nothing in between. So the combination of programmability, tokenization, and atomicity can be used in delivery versus payment use cases, which us, and I refer again to this, allow us to issue commercial paper via blockchain by simultaneously receive the funds on our bank account directly. And at last, it is distributed, already mentioned by him. So it is, we could also say it's local, and it means that we are using a shared infrastructure instead of having a shared interface like Swift or eBIC.
Yeah. Nervin, anything that crops up there in what Heiko's just said, and the risks?
Yeah, I think I completely agree with Heiko. Just to add on to what Heiko is saying, maybe, he's spoken about a lot of benefits of them. So by me adding on to some of the benefits will inherently address some of the risks, Sarah. I think, for global institutions, the need to hold liquidity in multiple entities and multiple geographic regions is significantly reduced by using DLT-based solutions. For example, some global banks have tokenized cash and implemented a global centralized intercompany liquidity pool that allows liquidity to be transferred on an intercompany basis. Therefore, having instantaneously around the clock liquidity, reducing that need to hold liquidity at local levels. This significantly reduces costs. It allows, current processes to be simplified and also just optimized on a very regulatory friendly manner, I would say. I mean, another key area or an opportunity where DLT provides, some support to treasurers is in payments. Blockchain-based payments made on an instantaneous global basis. And I think Heiko referred to it. It's using blockchain to make payments for real fiat currency. And that is the important piece here. By doing that, you're then removing significant costs, correspondent or intermediary players that introduces costs, and it becomes a little bit frictionless, where traditional payment rails are very important. But of course, this, as I've said earlier, just offers you an alternative rail to move money around. I mean, the last piece I would just say to this is, the whole big topic about AML and fraud, anti-money laundering and fraud. So sensitive topic, but again, these payments have this built-in audit trail, and the traceability is there. Since all of the transactions are recorded on the blockchain, distributed ledger technology-based payments can then be programmed to address other needs.
Yeah, and can either of you give some insight on how a corporate should get started? How do they begin? So they're sold on the benefits.
Yeah, I'm going to leave that one to the corporate.
I mean, first of all, I would ask myself, does my treasury business benefit from that feature? Do I have a global business benefiting from 24/7 cross-border payments? Or can I achieve further automation with the programmability feature? And secondly, you have to really honestly ask yourself, are you ready for this technology? You must be in the position to handle API calls, and you must also be able to operate on 24/7 and maybe instantly. So are you ready for this technology? So I would maybe start, if you say yes to this, I would start with setting up the infrastructure, start with opening bank accounts on the blockchain, maybe with the help of Standard Chartered, and get step by step into these use cases so that your organization can learn how you can benefit from this technology. And I would say it's a little bit different in any other treasury organization.
Yes, that's such a good point. So, Nevin, could you maybe shed a bit more light on how it works with other technology? Heiko mentioned APIs, but AI, the ISO transition, how does it all fit with that?
Taking all of what we said together and combining it, it boils down to a standard bank account. It's a normal bank account. It's all the same, the way you would open a normal current account with any banking institution. The process is the same. You have fiat currency that you're moving, which is normal currency. It comes just with more technical features. I mean, as an example, you get deposit insurance on it. There is no need, and this is a very important point, there is no need for a corporate to be involved in blockchain. Whether it's future-proofing your treasury or just looking to create an alternative method, that's where you get into it. There are no changes on the client side, which is very important, and Heiko can attest to this as well. It is pure messaging that is being involved, and a lot of the banks. Well, I speak for Standard Chartered. We already have our digital nostros in place, and this is where the on-chain piece comes in, and all the involved parties who access that nostro accounts then access it in the normal way, so operating a normal account.
Mm-hmm. And so does that mean that the regulatory context is fairly straightforward as well?
Excellent point again. Yes. The payment will, in all intents and purposes, for the example that we are discussing today, follow the usual protocols. It will follow the usual processes. All that the blockchain does is moving that messaging in a real-time basis and therefore accelerating it. And that's the important piece to note.
Brilliant. Thank you for that. So, Heiko, can you just conclude with some thoughts on what the future could look like here?
Yeah, I mean, when we look at the hype cycle, right, I would say that we left the excitement peak and also the disillusionment phase behind us already. And I think we are starting now to explore use cases with the real world benefits. So for me, one of the most interesting features is definitely in the context of delivery versus payment use cases, which I mentioned already. Executing payments automatically based on data, we can also call it trigger, has a huge potential, especially when you talk about automation. So, and I refer to this again, right? We use this for issuing digital securities, but also we are working on trigger maybe vendor payments based on shared and trusted, this is very much important, trusted data, and not via an ERP payment run. So this has the potential to open up business cases like per use or micropayments. Like this is where we also see benefits for our industry business, not just for Treasury.
Yeah. Exciting stuff there. Thank you, Heiko. And Nervin, any last thoughts there?
So today, as Standard Chartered, we have this ready in Singapore. We have it ready in Hong Kong. And, this is where the partnership with Siemens comes in. And of course, we will have it ready in the UK by, let's just say, the end of November 2024. Our hope is, our plan, let's put it that way, is to have this ready to have it open in further markets and to build further use cases for our clients, such as Siemens. Germany, as an example, is on the roadmap to be a settlement or a correspondent bank in future. And of course, we want Germany to be a full-blown sender and receiver funds down the line. And lastly, whilst today these flows are single currency, i.e. for us as Standard Chartered, it's euro, down the line, I think our idea is to enable multi-currency and multi-bank payments. And that's what Heiko keeps me busy with on an almost weekly basis. So yeah, my closing, I guess.
Oh, wonderful glimpse into the future there. Well, thank you both so much.
Thank you.
Thank you.
What a great discussion debunking those blockchain myths. Thank you, Heiko Nix, Head of Cash Management and Payments at Siemens, and Nervin Chetty, Executive Director, Head of Transaction Banking Sales, Germany and Nordics at Standard Chartered. I'm Sarah Rundell from Treasury Today Group. Thank you for listening, and if you'd like to hear more of our podcast episodes, please subscribe wherever you get your podcasts from.